Hello and welcome to a CMS Forex Daily Market Recap. I'm your fundamental market analyst, Nick Nassad. Today is Tuesday, May 11, 2010. Let's start with the euro-dollar pair, where the main stories for it was uncertainty and concern over the big Eurozone bailout announced over the weekend, and that actually sent investors to the risk haven of the US dollar and the Japanese yen. Some of the sharper equity gains around the world and in Europe were unwound a bit in Tuesday's session. Also, we had Greece submit a formal request for 14.5 billion euros as the first tranche of aid from the EU, and on Wednesday it will request 5.5 billion euro more from the IMF. We see that the euro-dollar pair slid as investors digested the close to $1 trillion emergency funding package from the EU and the IMF announced over the weekend. The price action to start the week here on Monday pretty much told the story. First, we had the initial relief rally, but that was cut short about midway through the session, and we gave up those gains during the New York trading session. The concern is that the bailout plan is a short-term solution, buying the Eurozone nations a couple of years of relief from market forces, but that the underlying problems are not addressed. In fact, we create several new problems. One is the question of moral hazard in the face of the unprecedented bailout, well, at least unprecedented for the EU, while second is the independence of the ECB. One problem with the bailout package is that it is more addressed to avert immediate defaults by EU member nations, while it does not address growth concerns. In fact, the austerity measures that countries like Greece will have to take will only worsen the economic outlook for the countries and making the repayment of longer-term debt, absent subsequent aid, extremely unlikely. Also in this case, perhaps a default would have been the best solution for a country like Greece with its mounting burden of debt. Also, since it will take time to actually set up the lending facility, we continue to see the euro pressured in today's trading. While we slid down to around 1.2667 as our low for Tuesday's session, as we can tell here, we've already finished the global trading session at 5 p.m. Eastern, and as we start Wednesday's trading session, we've actually moved even lower below the 1.2650 level. So our next points of resistance for this pair will be our lows from last week at the 1.2530 level here. Definitely the euro is not out of the woods yet, though compared to last week when we had such a rapid slide in the pair, perhaps the decline now will be a little bit more orderly. Still, very important to see what happens in this pair as we hit our lows from last Friday's session and especially Thursday's session. Our second main story in today's trading was that the UK pound was a pretty strong performer as talks between the Conservatives and the Liberal Democrats finally resulted in the formation of a coalition government led by Conservative leader David Cameron. We had entered the New York session during our overnight trading period as we had continued uncertainty which had pressured the pound, but as we had comments and news filter in that talks between the Liberal Democrats and Labour Party fell apart, then it made a power sharing deal with the Conservatives more likely, and so the pound rallied. By the end of the day, we did have the new Prime Minister sworn in, David Cameron. Why is this important? Is that first we have some stability in the UK government in that we finally have a UK government and instead of a hung parliament. Also, it is the Conservatives that have been making more noise about addressing the country's deficit problems with any real urgency, with the UK's debt and budget deficits right now creating similar problems as we had seen in the Eurozone. It's a very poignant discussion to have. Also helping the pound in today's trading was a pretty strong industrial production figures. Taking a look at that data, for the month of March, industrial production rose 2%, with manufacturing production up 2.3%. Those figures blew away expectations of a 0.3% and 0.4% forecasts. On the year, industrial production rose 2.3%, with manufacturing production up 3.3%. So that is a continuation of the recovery in the UK manufacturing sector, which is a good sign that the UK recovery will continue and gather pace. The next big story in the markets was that gold rose to a record high in today's trading, hitting the 1,232 level as its high for the day. We moved above our resistance from last week, around 1,214, and then we could see that we retested that level and traders are reloaded and pushed the pair higher in the late New York session. With the growing doubts about Europe's economic future returning with a vengeance after receding earlier this week, we could see that gold is being one of the main safe haven destinations for investors and traders. With the large bailout from the Eurozone or rescue package, it also increases the chances of inflation, and with gold being a tangible asset that traders and investors can invest in. If we look at the Australian dollar US dollar, With the Aussie very sensitive to commodity currency prices, we actually see that the Australian dollar fell in today's trading, sliding overnight, rebounding slightly in New York trading, and then sliding again to trade near its low by the close of today's. The news here was further rumors that China would allow the yuan to appreciate, which pressured higher yielding commodity sensitive currencies like the Aussie. Adding to that sentiment about China was stronger than expected data on Chinese inflation, as well as continued sharp increases in retail spending as well as housing prices, which suggests that Chinese authorities will continue to try and cool the economy. Also, we had a bit of a topsy-turvy action in the U.S. stock market where we opened lower around here. We rallied and took pair some of those gains, but then we fell back down in the second half of the New York session. So risk appetite was not apparent in the markets. We had a sort of sideways choppy day, and that was reflected in this risk sentiment sensitive currency pair. If we take a look at the US dollar Canadian dollar, while we traded in a range throughout most of the trading session, we did break below our support for today and yesterday at around 1.0225, moving to a low at 1.0150. That put us below the 200 period moving average that had acted as support throughout most of the last two trading sessions. So if we bounce down off this 200 period moving average, and also we could see our 50 period moving average are going to come into a confluence here, then that could be a positive sign for the Canadian dollar. We do have this upward sloping support trend line to watch as well. Taking a look at our other major pair, the dollar yen. Going back to the euro, here we're taking a look at the euro Swiss franc pair. We had very large volatility in the last four trading sessions after very quiet trading in this pair throughout most of the last couple of months. We moved back close to the 1.40 level, which was our low last Thursday following the big plunge in markets, and today we're testing the 1.4050 level. Yesterday we had rallied up to our old level of support, which turned to resistance, and now we're looking to test this old support. So we'll see whether the Swiss National Bank, which has said that it does not want to see this Swiss franc appreciating against the euro, if it'll tolerate the pair moving below the 1.40 level. So keep your eyes out for that important level. So that's all for market highlights for today. Let's take a look at what to expect in the fundamental docket for the upcoming trading session. Tonight we will have data from Australia in terms of home loans, while overnight we get preliminary GDP data both from Germany and the Eurozone. Also overnight, Switzerland posts its producer prices, the UK posts its monthly jobs report, the claimant count change, as well as unemployment rate. The Eurozone releases its industrial production figures, and the Bank of England will both get a speech from the Mervyn King, the governor of the Bank of England, as well as the Bank of England inflation report. So the pound will have another set of event risk in tomorrow's session. Tomorrow in North America, we get US and Canadian trade balance data, the Canadian New Home Price Index, and then at 2 p.m. the U.S. federal budget balance. And that will wrap up this Tuesday edition of the CMS Forex Daily Market Recap. For more news, videos, and analysis, please visit our website, cmsfx.com. I want to thank you for watching and wish you good trading.